PwC is out with a new global crypto hedge fund report, and it shows the proportion of traditional hedge funds investing in crypto assets fell in the past 12 months, but the long-term outlook remains positive. Joining us now to discuss is the co-leader for PwC's FinTech Trust Services, John Oliver. Welcome to the show, John.
Thanks, Jen, and thanks, Emily and Lawrence, for having me and giving me this opportunity to talk about PwC's fifth annual crypto hedge survey, and we've done that in conjunction with CoinShares and the Alternatives Investment Management Association.
It's a pleasure to have you here with us this morning. Why don't you first talk us through some of the key takeaways? The number of traditional hedge funds investing in crypto assets fell to 29%, down from 37% last year. Talk to us about what this means and what else is in the report.
Yeah, great question, and thanks for starting that way. A lot of news outlets are picking up exactly the headline that you just did, but I actually see it a bit differently. So let's start with what our report looks at. Our report looks at two populations. First, we have traditional crypto hedge funds. They were created solely for the purpose of investing in crypto assets, and then we surveyed another population of traditional hedge funds to ask them, are you invested in crypto assets? And if so, or if not, we asked some questions about that. It's that second group, traditional hedge funds, that were never created to invest in crypto, where last year we asked them, are you invested in crypto? And 37%, as you note, came back and said yes. So then you think about what's happened. We've entered crypto winter since our last survey. We've gone through the events of last summer and last fall. There's been a 65% drop in the value of Bitcoin, and yet the traditional hedge funds, 29% of them, still came back and said they're invested in crypto. On top of that, when you ask them how much are they invested in crypto, last year they had invested 4% of their assets under management, and this year it almost doubled to 7%. So while the headliner may look negative, it's actually, I think, an indication of the commitment of traditional hedge funds to the asset class.
Do you think that number might have changed since you did this? I don't know when the survey was done. It was Q1, right? And back in Q1, as you said, we had crypto winter. People were licking their wounds from the FTX debacle, catastrophe, if you will. UST was still providing a stink in the air here for a lot of people who got burned. But since then, we've seen Bitcoin particularly rally, maybe ETH, of course, rallying. The alts, maybe not so much. They have regulatory pressures. But do you think that with the majors, ETH and Bitcoin, rising as they did, that maybe some of that percentage that dropped off in the second survey might have come back into crypto, and because they don't want to miss out on another rally?
Yeah, and first of all, you have the timing right, and so we have had a bit of a bull market here in the past couple months. Hedge funds are opportunistic. That again, we have two populations: the crypto traditional hedge funds, they're going to be in no matter what. But the traditional guys, they have an option, an election to make on whether or not this is an asset class they're going to invest in. And when they see movements, they're going to move into the asset class. So yeah, I wouldn't be surprised if the percentage increased, but we don't know.
And lastly, were you surprised to see that when people respond to the survey, their perception of the industry wasn't really affected by that FTX implosion? As it was happening, I think everyone was just predicting a mass exodus from this industry. But it sounds like from your reporting that the sentiment is still there.
Yeah. If you look at the crypto hedge funds, I think they're true evangelists, and they understand that the market dynamics are going to go through ups and downs. And some of the events obviously were pretty earth shattering this past fall. But that's to be expected with a developing technology and asset class. And so they're all in. The traditionals, as you point out, decreased a bit, but I still think that this is a inefficient new market with a lot of potential upside. And so it's the type of thing that traditional hedge funds might look to achieve higher yield. One of the things we had asked them was whether they expect to invest more in the upcoming year, and as a result of the events last year, 69% of them said they decreased the amount that they were otherwise going to invest, but they said that is stopped now. They've hit their bottom, and basically they're going to invest more. Back to Lawrence's question, it's likely they're investing more as the market starts heating up again.
All right, John, we're going to have to leave it there this morning. It was a pleasure having you on the show.
Thank you, Jen. Appreciate you having me.
That was the co-leader for PwC's FinTech Trust Services, John Oliver.